Stop messing around, stop fooling around, stop delaying, stop procrastinating. Get up, get out, get it done. Everything is possible, nothing is a problem, and anything can be overcome. I just get my ass up out of bed, I get my shit together, and I get out and I start the fight. And that will transform you from a mere mortal into a superhuman being. I've never, ever, ever met anybody who told me that they got rich watching their IRA or their 401k.
Welcome to the Daily Cash Flow. My name's George Robson.
I am Peter Siegel.
Peter, what's been on your mind recently? What's been on your mind this week?
Well, recently I'm in deal mode, I'm in acquisition mode, I'm under contract to buy a few different things. I've got my underwriting going on. I'm under contract, so I'm performing to the terms of the contract. I'm getting insurance together. I'm getting all of my due diligence done. So that kind of thing, bunch of late nights. I stay up, I get it done. I actually like it a lot. I've been thinking a lot about insurance and quoting property and liability insurance for a new acquisition. So here's what I mean. I look at these deals. Some of them the brokers send to me, so I open up the broker setup. It's got income, projected expenses, you get a projected net operating income, and then you could derive a value for the asset. And the insurance, inevitably, is always wrong in these broker setups. And I pick up the phone, I call the broker, I say, how can you quote insurance at $30,000? And they'll tell me, oh, well, we had our insurance guy quote it. Oh, really? What were the limits and coverages? And what are the deductibles? And there's radio silence, right? There's never an answer for that part. They just say, oh, well, we had our insurance guy who's connected to our agency, he quoted it for us. Well, here's why that doesn't work. So you're talking about an existing asset from a seller that's got a mortgage amount on it that you're not going to have. You're going to have a larger mortgage amount because you're paying a lot of money for it. You're paying more money for it than what your seller paid for it. Now you're talking about lender requirements. The lender who's giving you this mortgage has a list of requirements they need you as the borrower to adhere to. So you have to get your list of lender requirements and get those requirements quoted. You're not getting it quoted to what you think the coverages should be. You're going to get it quoted to what the lender's requirements are for the coverage. And so the broker's telling you what insurance expense is, and they're saying, oh, well, that's what the seller has on it now, or that's what we had quoted. It's all bullshit. Don't listen to any of it. It's always wrong. Always. So if you want to underwrite your new deals and your new acquisitions accurately and be tops on your game, you got to go out and get your own quotes. And you can either get it formally quoted from your own insurance guy, or you can get a ballpark. At least it's a starting point. But never, ever, ever take the broker's word for it as to what they put in the offering memorandum or the setup of the property that they've sent to you, or the seller themselves. Maybe you're dealing directly with the seller and the seller is sending you a setup. Don't take that insurance number as the number that you're going to use, because you're going to get whacked when your lender goes to give you a loan quote.
How do you verify for yourself on your end?
So I get a quote. I've got a relationship with my insurance agent. We'll size up the building. We'll figure out what the gross potential rent roll is. I'll tell them what the purchase price is going to be. I'm going to tell them what my loan amount's going to be. And then I'm going to call up my lender and say, hey, lender, send me over your lender requirements. They're going to send me that. I'll forward it to my insurance guy. Now he's got a package that he can quote. He's going to quote to my purchase price and my rent roll, and he's also going to quote to the lender requirements. Maybe the lender requires law and ordinance coverage. We call that L&O, law and ordinance coverage. If you're pre-existing non-conforming use, as many older buildings are in these areas, many of the areas that I operate in, an existing building is typically a pre-existing non-conforming use, which means the zoning has changed over the years. That apartment building, if it were to burn down, you don't have the right to just go rebuild a new apartment building. It's probably an R1 or R2 zone. In my case, we have a lot of that around here. So you have to then go to zoning and planning and seek permission to rebuild your apartment building. Maybe you're not going to get permission. Law and ordinance coverage will kick in and protect you in the event that you can't rebuild something that's not permitted as of right. That coverage costs money. All of this coverage costs money. So the four things you want to be concerned about with insurance coverage management are deductibles, limits, coverage, and premiums. Those are the four key things. No two insurance policies are ever the same. Maybe you're going to have a lower deductible policy versus your counterpart's higher deductible policy. Maybe you're going to have $1 million more of property coverage than you would otherwise need. And what drives property coverage? Your price per square foot to rebuild. Frame construction today, in today's market, will underwrite at maybe $200, $215 a square foot. If it's masonry construction, you're looking at more, maybe $275 a square foot, maybe $300 a square foot to rebuild a masonry building if it should fall down, burn down, get knocked down, whatever. You have to know your construction values, you have to know your replacement costs, all of that stuff you have to be an expert in. George, we talked often about becoming an expert in many things. So now I'm talking about insurance, but I'm referencing how you have to know construction, you have to know replacement values. And you have to have a sense of risk management and asset management, because as an asset manager and property owner, you're the one who's responsible for your coverage renewals and your policy renewals that come up. Do you have the right amounts? Do you have to increase or decrease depending on what's happening in the marketplace? If you're in a coastal area, like a lot of our buildings are, there's not a big marketplace for insurance providers in coastal areas. So you have to be able to have options to go to different carriers to get quotes. If you're in a non-coastal area, that can be quoted very easily, and where it's a very competitive market, there's going to be a ton of options for you. You can get a ton of quotes and get very competitive pricing. So you're going to have to be on top of all of that kind of stuff. But for sure, premiums, deductibles, limits, and coverages are the 4 key areas of any insurance policy, and you're going to have to know all of that stuff and know your replacement cost of your asset that you're insuring. And listen, don't take your broker's word for it. Don't take your seller's word for it. Get your building quoted yourself with your guy, with your lender's requirements. You're going to get an accurate quote, plus or minus 5% you'll be off, but you're not going to be off 20 or 30% or 50%, which is what you're going to be if you rely on the broker or the seller to tell you what the insurance expense is.
Was there a particular part of your career where this really became a priority and you realized that this was something that needed to be prioritized?
Well, early on, you recognize that you have to know what insurance is all about. And all of the real estate guys that I knew that I was meeting and watching and listening to, they all left insurance management to themselves. They didn't have an employee do it. They didn't have a property manager do it. They didn't have their CFO do it. They didn't have someone else do it that they farmed it out to. They did it themselves. I'll never forget it. I saw time and time again all these huge successful guys in New York that were real estate tycoons. They were in charge of insurance for their portfolio themselves. Well, when you see that, you go, oh, if it's important enough for the boss to want to do it themselves, there must be something in there that is important, right? So
that seems to be kind of like the secret sauce, so to speak, for you in terms of knowing what needs to be hands-on and knowing what needs to be delegated. There's
another one, too. You didn't ask me about this, but I'll never forget, and I can't remember if we spoke about this, but I will never forget. When I was a kid, I was in New York City. My brother had an office in one of the Trump buildings downtown in the financial district. And Donald Trump signed all of his own leases. His signature was on my brother's lease for my brother's office. And I'll never forget, I said to my brother, what's up? Why is someone like Donald Trump signing his leases? My brother looked at me and said, he signs all of his leases. And it hit me so hard, like, that's where the buck stops, right? The lease document. Things can change, but once you sign it, that's what the deal is. So it made sense to me that Donald Trump or anybody else who's managing expensive and important portfolios of real estate would want to see that contract come across their desk and be the one that gets to sign the contract. Now, I'm sure they've got a summary page. I'm sure their legal team or their leasing team is prepping them on what the key bullet points are of the contract that's in front of them. But they're looking at that prep, and then they're going right to the document. They're going to review that document and sign it. That's what I do every day. So I sign my own leases. I'm in charge of my own insurance. And it's one of the ways I sleep at night. I don't leave that stuff to chance.
Should commercial property owners be concerned about taxes right now?
This is another thing that's on my mind this week. This is really part B of your first question to me. So I'm underwriting property taxes on these new acquisitions I'm making. So should commercial property owners be concerned about taxes? Fuck yes. I mean, look at this world we're in. No one has any money. The municipalities, the towns, the states, no one has any money. So the towns are going to look to the commercial property owners to foot the bill for these budget deficit gaps that are hitting everywhere and all of us right now. I mean, COVID's wiped out the budgets of everybody, towns, businesses, individuals. But I promise you that the property owners are going to get the finger pointed at them to make up for these deficits, and property taxes are going to go up, especially in the crazy state of New Jersey, where we all know what happens here, in New York, New Jersey, the tri-state area. I mean, it's a crazy tax environment, but New Jersey in particular, a very fractured state economically, and property taxes are constantly skyrocketing. Just when you think they're done, next year they go up again.
Do you have recommendations for like underwriting for that, preparing for that kind of scenario?
Yeah, I mean, you got to be careful. A lot of people say, oh, well, call the local tax assessor and just tell them that you're buying 4 Main Street, and what would the property taxes be if you were to buy 4 Main Street for $20 million. The assessor is going to start salivating. Wait, what? 4 Main Street? You're going to buy it for $20 million? And he'll look it up on his screen, and he'll see that it's assessed for $4 million. And he's going to go bananas, and you're going to get reassessed as soon as he sees that trade hit his desk. So I would recommend be careful. Don't rush to make a phone call to the local tax assessor and disclose the address that you're looking at. Here's what I would do. The tax assessor's methodology for assessment is public knowledge. So look it up, become an expert at it, get familiar with it. How often does that municipality reassess? Is it every year? Every 10 years? Never. Figure out the frequency. I would pull up the assessment roll. I would look at what the land and improvement value is, what you're about to pay for the building versus what's on the assessment roll. I promise you what you're about to pay is going to be a lot more than what the building's assessed for, so you should be prepared for the reassessment of your building that you're soon going to be buying, and the inevitable increase in property taxes that are going to come along with having bought that building at that new higher price. So be careful. Maybe don't call the assessor right away, and maybe don't disclose what the address is, but do your own research, figure out the assessor's methodology. You're going to have to become an expert in the local rent comps. You're going to have to know what the rental comps are for product types and unit types of the size and quality that are in the building that you're about to buy, because your assessor is looking at all the buildings that are comped to this subject building that you're about to buy, and he's going to derive income and expenses based on what the market is for this building type, and he or she is going to derive a net operating income, and he or she is going to apply a cap rate or an adjusted cap rate to the net operating income, and is going to come up with a value, a market value of which to peg your assessment to. So you should be ahead of that curve and know that that's what the assessor's doing, so that's what you should do. You should be doing your own income and expense projections based on every similar building in that area that assessor and that municipality can see and touch. You should know what all those buildings are assessed for. You should know what their approximate income is. You should be on apartments.com and the websites. You should see if there's any advertisements for vacant units in any of those comp buildings, and know what the rent comps are. Because I promise you that's what the assessor is going to do, and they're going to generate a model, and if they don't yet see your new purchase price that's very high come across their desk, they're going to assess 4 Main Street based on the income and expenses of what should be in the marketplace. And you're going to have to be able to maneuver around that. So definitely get ahead of property taxes. Expect property taxes to go up. Become an expert in how property taxes are determined. There's assessment and there's tax rate, so you're going to have to know the municipality's budget, if there's a budget shortfall or if there's a budget excess, and how the tax rate is going to move depending on your town's government leaders being able to manage the budget in that town. Because if there's a shortfall, they're going to raise the tax rate. And if the tax rate goes up, and if your assessment goes up, now you've got a higher assessed value, a higher tax rate, your taxes are going to the moon. So get a control of it, man, and get your arms around it. And for sure, if you're going to buy something, be comfortable where those taxes can go. And don't get stuck, because you're going to get a mortgage based on taxes being here. If taxes go up to here, your mortgage is all of a sudden going to be debt service constrained. You're going to be in covenant default. You're going to have all sorts of problems. You don't want those problems. So become an expert in tax assessment.
So obviously, there's a lot of variables to take into account with that kind of situation. What do you do with that information once you realize, there's a tax hike coming up, or that you have done your underwriting and you realize you're in that kind of situation?
So what I do with it, I rejected the purchase of a deal last week. I was under contract to buy a $55 million deal. The broker and the seller had sent me a setup that showed taxes at $280,000. Well, that was a projection based on the assemblage of land, and the CO was just obtained maybe 3-4 months ago. So the assessor hasn't reassessed the building out of its pre-CO phase. So now there's a CO on the newly constructed building. The assessor is going to have to reassess this upcoming fall. The CO's in place. He's going to do an income and expense projection. I think those taxes were going to $550,000. It's like a doubling of the property taxes. And so when the property taxes in this case doubled, it eroded value by like $5 million. And I just couldn't bridge the gap. I couldn't get comfortable and get there. So I rejected the deal. I mean, we had contracts out. We were trying to get comfortable with it. We asked the seller to give us a hurdle so that when the new assessment came out, if the assessment was above the hurdle, we could terminate. And if it was below the hurdle, I had to move ahead and perform and close. I was comfortable with that. The seller wasn't. I don't blame them, but they didn't blame me for looking for a hurdle either. So I used that information to guide my purchase and acquisition decision. And it guided my contracts. I had to put language in a contract, all because we weren't really sure what property taxes were going to be. I mean, you never really know for sure from year to year to year, but you sort of plug in or project that, oh, next year property taxes are going to be 2 or 3% more than they were this year. And you sort of keep that going and going. You have to put in something. So project that property taxes are going to increase. But a doubling on property taxes, a 100% more than what they currently are, that's going to impact value way more than a simple 2 or 3% bump. In fact, it's going to impact it millions and millions of dollars. So if you didn't buy right, it might be because you didn't know what the property taxes were going to be. I couldn't get comfortable with a doubling of property taxes when the underwriting that I did was based on the low amount that was sent to me from the broker and the seller. I mean, thank God we saw it, because had we not, we would have moved forward. We would have submitted a loan application. The loan application would have required that property taxes be the lower amount, because that's what I sent over to them. And sure enough, there would have been an appraisal. The appraiser would have caught it. I would have been under contract already. And my seller would have said, it's too fucking bad. You got to buy the building. So thank God we didn't move forward with that. But that's what I use it for. I use it to make sure I know what I'm doing. I use it to make sure I know what my contract should say or not say. I use it to make sure I know that I'm getting the value. I mean, these things trade on the value of the cash flow, income minus expenses. So if your expenses are at a certain level, but really after underwriting and when you get your hands around the building and you start operating the building, you find that your expenses are at this level, it's going to impact cash flow significantly. And when cash flow goes down, the value of your building goes down. So you don't want those problems. You want to know that you're valuing the building correctly. You want to know that your lender is going to be quoting you a loan based on a correct value of the building. And you can fight back and forth with your seller and the broker and whoever else about what value should be, and you can agree on prices. But if the income and expenses is more than a couple of basis points off from where your underwriting is, you're going to have problems.
Yeah, that's what jumped out to me. It was the value, your wording of value, and that both insurance and the tax situation are kind of these, not secrets, but they're things that you could overlook if you're not careful. This
is a business. This is an investment. The investment's value is 100% predicated on the cash flow that it throws off. Without the cash flow, it's worth less. With more cash flow, it's worth more. What affects cash flow? Income and expenses. Well, we're here talking about insurance and property taxes. These are big swing numbers. Those are your two biggest expenses running any commercial income producing real estate, is your property taxes and insurance. After that, you've got utilities, management fees, repairs and maintenance, grounds, landscaping, things of that nature, staffing. But your two single biggest expenses on any commercial building are going to be property taxes and insurance. So you better get your hands around those two things, because a few $1,000s swing in either direction of taxes or insurance can impact your loan proceeds by a lot, right? Because a few $1,000s gets capped at a cap rate. So it's not just a few $1,000s you're off, it's going to be several $100,000 you're off per few $1,000 swing. And in the case that I just cited for you, if property taxes double and they double by a few $100,000, it's going to be millions of dollars that your valuation is going to be off. So you're going to be overpaying by millions of dollars if you don't stay on top of your property taxes.
Yeah. All right. Things to look out for. I have a listener question from Twitter. Who do you see as your biggest competition, and how do you keep your edge?
Wow, my biggest competition, without a doubt, is me. I'm in competition with myself all of the time. And here's what I mean by that. So I'm a type A personality. I want to problem solve. I want to get my ass up. I want to go. I want to be successful. So my benchmark for that is what I did yesterday. So tomorrow I'm trying to be better than I was today, and so on and so forth. So I'm constantly competing with myself, trying to better myself, trying to expand myself, trying to learn more, do more, grow, listen more. I want to grow in every possible way. Well, my most recent benchmark is where I was yesterday. I'm really keyed into knowing what my own levels of performance and my own levels of awareness and knowing what all of that stuff is and then trying to expand and grow beyond that. But I've got competition when I go out to buy buildings. I mean, there's other bidders in the marketplace, so I'm competing with them. And the way I compete with them is not only in price, but in terms. I try to be strongest in price and terms, and I've got a background, I've got a track record, I've got a reputation that I can perform and close. There's a lot of bidders out there that are throwing high numbers around to buy apartment buildings. They've never closed on a deal before. They've closed on one or two deals before. And if you're a seller, be careful of that type of buyer. You want to go with a jockey on a horse who you know can perform, who's done it 100 times before, a million times before. Look, we have competition. We're in the apartment rental business. So every time we put an apartment up for rent on the market, we're competing with whatever else is on the market right there. Our product is best in class. We're mid-price product, but we're the best mid-price product there is, I believe, in our market. So I'm competing with all of the other stuff that's in that price range too. And so we try and make our product stand out with quality renovations and good service and great locations and amenities and things like that that maybe our competition in the same price point aren't going to be able to offer. So we compete with the marketplace there. And then lastly would be the competition that I speak about when I'm speaking to investors or partners, and we talk about what their investment alternatives are. And they'll say, well, I can leave my money in the bank, I can leave my money in my 401k, I can leave my money in my IRA, I can not touch my stock portfolio. Why do I have to go into your building deal? And then we have a conversation about the benefits of real estate. That conversation is really a short one because similar to what we've spoken about here, I'll reiterate the differences of investing in real estate versus all of these other different investment alternatives. And but it's a bit of a competition for investor dollars. You want to make sure you're giving your investors and partners an option and an opportunity to invest in real estate. That's what I do. I make it available to them, and they can decide. But usually, it's a pretty easy decision for them, and for most, I would think.
It's interesting. Your first answer to the question that your biggest competition is yourself is in a way kind of the answer to the second part of the question. That keeping your edge, I feel like, in many ways, comes from being in competition with yourself and bringing out the best in yourself. And as a result, I would imagine that hones your edge in competition against everyone else.
I don't need anybody else to tell me I'm doing a job that's not great. I don't need anybody else to tell me that I can do better. I don't need anybody else to tell me that they're disappointed with me and how I did today. I mean, I know it. I'm my own worst critic and I'm my own best coach. So I see immediately how I perform and mistakes that I've made and things that I've done well, and I'm able to analyze that and correct and adjust and have a better day tomorrow. When people ask me how I'm doing, I always say better than yesterday and not as good as tomorrow. So I try and live by that, and I don't need a whole lot of kicking in the ass to get me to improve or do better. I see it, and I'm pretty hard on myself, and I want to be better than I was yesterday for sure. So I work pretty hard at it.
Yeah, beautiful. I want to talk about mentorship a little bit.
Again, didn't we talk about that?
We have, I think, really kind of tangentially, though. I think you've talked about your dad and how much he was a mentor to you. I was curious what your thoughts are in terms of seeking out mentors. Is that something you recommend? Because obviously with your dad, you grew up with him. He was just kind of there. Do you recommend seeking out mentors intentionally? And how would you recommend going about that? Yeah.
Look, as you point out, I had a father. I learned a lot from him, but there were so many other people in my life. There were family friends. There were teachers along the way. There were people that once I got into business, I saw that they were crushing it and they were experts. And so I would have these relationships with them and I would learn from them. There's so many. If you don't have access, if you're younger and maybe you're not in a business environment yet where you have access to a lot of successful people, you can seek out mentors. There's many online. You can seek them out in your community, write those handwritten notes or send those gifts like we spoke about and request a meeting. People have done that with me often where they've requested a half hour of my time and have made themselves stand out a little bit so that I remember them, and they kept calling and then they kept calling and I took the meeting and developed a relationship with some of them over time.
Were there things that stood out to you on the people that you met with that you said, oh, that's the person that I want to meet with, that I want to mentor?
Their tenacity, persistence. Look, everybody in the world can send an email or pick up the phone and try and call you one time, right? And then when you don't respond, 99% of the world's just going to fall off a cliff. You'll never hear from them again. But the people that I ended up taking meetings from often were the ones that pounded on the door, showed up at my office more than once, wrote me by hand more than once, emailed. I mean, there was like a multiple assault, right? And that kind of thing, it's hard to ignore because that doesn't happen every day, and those people stand out. And you know what my feeling is about how important it is to stand out. So when people stand out to me, I take notice and I try and be as helpful as I can. I mean, there was one person that I don't know how he did it, but he found out where I lived and he showed up at my house, and I was pissed, and I kicked him in the ass and sent him on his way. But he retooled his effort and got his act together a little bit and started coming by the office and trying to get meetings. You remember in the movie Wall Street when Charlie Sheen's character kept showing up at Gordon Gekko's office, was flirting with the secretary, brought the Cohiba cigars for Gekko's birthday. I mean, that's like the kind of persistence. And Gekko gave him the meeting because he was persistent, right? He said, man, you're persistent. What do you got for me today? He said, you're persistent. What do you got? So they cut right to the chase. That's what you got to do. And I always appreciated that when people wanted to have my attention for a moment or two. So I'm happy to give my attention. But I appreciate the persistence and the never give up sort of tenacity that these people will display.
And especially right now, it's easy to give up quickly and think that someone didn't take my call or someone didn't take my email because they didn't like me. But so often, I don't know who said this, but there's a quote that never attribute to malevolence what can be explained with busyness. And,
George.
And especially right now, we're so busy, everyone's so busy, regardless of who you are, that it's just so helpful to do that, because then it allows you to be persistent and to just be like, well, they're a busy person, so I'm just going to try again.
Right. So here's a recommendation. Seek out the experts in their local area, become attached to them, work for free, nights and weekends, and don't look to gain anything from it other than the knowledge and experience and the connections, because that's going to be the stuff that's going to propel you. Sure, you can offer to be in their presence and ask to intern or work part-time nights and weekends in exchange for a salary or money or something, and maybe they'll feel obligated to do that. Great if they do, but if they don't, I suggest being attached to them like an octopus just to get the connection and the experience and to absorb the things that are happening in that world that you want to learn about.
As someone who's mentored other people, what do you get from that side of the equation as a mentor?
I get a lot. I'm called upon often to give back, and it's something that I enjoy doing. I think it's a responsibility of all of us, no matter what level of success you may have achieved and no matter where you are in life. I think giving back is everyone's responsibility. Teaching others, helping others financially, making donations, sponsoring events, all of those things fall under a similar umbrella. And it's important to do all of those things. So when I can help young people accomplish things or set their mind straight or get them on a path that's different than where they were before they saw me, and it's helpful to them, it's a great feeling, and I think it's the right thing to do.
Yeah, right. In a way, you're building a society that will, come back and help you in that way.
Absolutely. I mean, anybody who's been involved with any sort of giving back, not just mentorship, but of any kind. I mean, it feels good, but it's the right thing to do. It's how our society works and functions to its fullest.
Yeah. All right. 3 to 5 ways to raise capital. That's what I want to know. 3 to 5 ways to raise capital.
So number 1, friends and family. You have at your fingertips your contact list that has all of the people in your life, friends and family. They've been with you for so long. You don't even realize it, but there's an abundance of capital waiting to support you and invest with you. Tap your friends and family network. Number 2, your business peers. Same thing. These are people that you work with, that you work for, that connect with you, that you purchase from, that you sell to, whatever the case may be. You've got a network of people that if you pare it down and try and hone down to the people that are focused on the same area that your business idea is focused on, you can raise capital from those people. Number 3 is crowdsourcing and crowdfunding. Get on it because it's happening, it's for real, and there's a bunch of players in your space. Find out who those players are, get connected with them, let them vet you and test you out as a sponsor for deals, and they will be a powerful source of raising capital for you and with you. Number 4, investing clubs and investing groups. Sounds silly, but find people who are like-minded in your area, get together, pitch business ideas, make it a Shark Tank, learn from it, grow with it, and use your investing club to help raise money. It works. Give it a shot. But no matter which or all of the ways that you choose to raise money, make sure you have the following things down, no excuses. Number 1, make sure your business plan is together, that you're an expert in all facets of your business plan, and that you're prepared to answer the tough questions that you know are coming, and you know what those questions are going to be. So make sure that you know all of that stuff. Number 2, make sure that when you present your business plan, make sure that your presentation skills are top notch. Make sure your eye contact is together. Make sure that your presentation skills are hot and working and firing on all pistons. Make sure that you're speaking slowly, articulately. Make sure that you're capturing your audience, and you're going to have a better time raising capital if your presentation skills are great. You've heard me talk about that a lot. And number 3, have fun doing it, because I promise you, if you look like you're enjoying yourself and if you look like you're having fun while you're raising capital to the appropriate audience, you're going to raise money.
Yeah. Wow, I really enjoyed this conversation.
I'm glad you enjoyed it, George.
So those are my kind of traditional questions that I have for this week.
Zest Quests?
So, well, before we move on to Zest Quests, I just wanted to touch base on, is there anything else about the week that you've noticed? That was such a rich
it sounds
question.
like you know something that everyone else doesn't, and you're trying to pull it out of me.
Well, no, it was just
getting at?
no. The first question was such a rich answer. I feel like I need to just ask you more about like what's on your mind, what's up. Have you what's going on?
What's going on? What's on my mind? What's up? Well, you know what? I think about now. Last week you asked me about some deals that.
Right, some that had kind of gone awry and some that went well. And yeah.
I mean, so it seems to be a recurring theme lately, so let's stick with that. Yeah. I almost want to say to people sometimes, shut the fuck up. Like maybe they didn't have a person or a mentor or an example or a role model in their life to see what the right way is to conduct yourself or how not to conduct yourself in a business situation. And it's mind-boggling to me. I scratch my head and I go, wow, did they really just do that? Wow, did they really just say that? We're here trying to do business and someone just blew up the deal. Like, what are they thinking? So I'll tell you what happened to me this week. I've got a neighbor at one of my properties. He's selling his property. He came to me first. He said, look, I'm selling my property. I wanted to give you first shot. Great, thank you, sounds good. We talk about the numbers, we talk about the features, we talk about the terms of the deal. Looked him right in the eye, shake the hands, we got a deal. Sent the contracts out, the contracts exactly mirrored the handshake, exactly. And after a couple days of back and forth with the lawyers and the contract, and it was really a very simple deal. I've done it hundreds of times in my life. I think this guy has too. Radio silence. Guy goes silent. And no phone call. The lawyer calls and says, well, my guy changed his mind. Thanks, have a nice day.
Wow.
Fucking really? Are you serious? Like, what happened? I mean, it's either he felt like he left a little bit of money on the table and he was embarrassed about it and wanted to try and get more. Okay, well, call me and tell me that. Say, hey, Peter, I fucked up. We shook hands, I know, but boy, I spoke to a broker and the broker feels he can get, right, the standard story that we get all the time, right? I spoke to a broker, the broker tells me he can get more, or I got another offer, it's for more, can you come up a little bit and match the offer? Something, but say something. The guy said nothing. So what ended up happening was he wrote me an email several days later after the radio silence and said, Dear Peter, thank you for your interest in the property. I've decided to hold off and sell towards the end of the year, right? We're in September now. The end of the year is like 4 months away, right? Less. What's the big deal? Let's get into a contract now. I'll close in January. You want to use your property through the end of the year? Fine. You want to keep it for a few months longer? Fine. Let's do our business deal now. I know you're going to sell it. You know I want to buy it. Why are you cutting it? So I never understand how people are so arbitrary with a handshake and an earnest look in the eye. When you cut a deal with someone, your word is everything. If after extensive discussions with someone about entering into a business deal together with them and you agree on the terms and it's a pretty simple deal, and you look them in the eye and you shake hands and you smile and you pat each other on the back and say, boy, I'm really looking forward to this, and then they go radio silent and they do a 180 and they renege on you. Look, everyone can do what they want to do, but if you do it with me, you're disposable and you're unreliable and we're done. And I'll never want to do business with you. And I'm going to tell everybody that I know not to do business with you. And I know everybody. And I don't know how people can conduct themselves that way. So to that guy, I say, shut the fuck up and come back to the table and let's figure this out. You want to hold on to the property a few months longer? Okay, no biggie. You want to get another 100 or 200 or 500, whatever the number is, because someone got wind of it or a broker friend of yours came back and emailed and said, oh, don't do anything without talking to me, and you figured you can get more, let me know. Give me the shot. But you came to me, we shook hands, we started circulating documents, I'm engaged at this point. To go radio silent on me, bad form, dude. If you're willing, great, I think you are. You're certainly able, so let's figure the readiness out and we'll make a deal.
Right. Shut the fuck up.
Shut the fuck up otherwise.
Yeah, we should make a segment of that.
Look, we should make a segment of that. Maybe next week I'll have another crazy story. But I mean, I think in general, I'm always amazed by how people choose to conduct themselves in business. I mean, if you're in a relationship with someone, an intimate relationship, and someone just fucks you over, right? You're like,
you destroy the
relationship. Yeah. Like you destroy the relationship. Like, it's amazing to me the decisions that people will make in the course of doing business. There's bad choices, there's good choices, make the good ones. There's right and wrong ways on how to conduct yourselves. So maybe the segment should be the right and wrong ways and how not to conduct yourselves in business. For those that are looking for mentors, maybe they'll watch the this week's episode of Shut the Fuck Up.
I think we should do that.
Yeah, I think we should too.
All right.
Good question.
Yeah, we'll look out for that, listeners, next week for Shut the Fuck
Thanks,
Up.
Thanks, George.
Zest Quest, Peter?
Zesty.
Fantastic.
Lemon zesty.
Lemon zesty. First one, actually, we've kind of talked about this a little bit in this episode. We didn't even.
Are we repeating ourselves?
I hope not, but I'm going to ask the question anyway. What's your preferred method to support a cause, organization, or charity?
That's a relevant one for me this week. I was just asked to be on the national board of a particular charity organization. I had to say no, but you know that when I say no, I like to say no in a big way. So I said no in a big way, and I invited them to circle back to me next year. Now's not the right time for me. I'm already involved in multiple organizations, both financially and with my time, so I couldn't really add anything new. So I had to say thanks and no thanks to them. But my preferred way is, look, if I align with the cause and if I buy into it and if I like it and if I like the people and if I like the mission and where it's going, I mean, then I love it. And I want to be involved. And when I want to be involved with something, I'm involved 100%. And I get my family and friends and my businesses involved, and I weave it into the fabric of my life, and I do the most that I can do. Because I believe that that's what these great organizations deserve, and I believe that I want to make an impact. I mean, I don't want to do anything where I'm not making an impact. I want to be involved if I can make an impact, both financially and with my network, and add value and bring something to the table that they didn't have before. I'm involved, George, with this great organization called dreamfoundation.org. Throw up a link if you don't mind. So this is a great organization. I've been involved for maybe 8 years now. And we're based in Santa Barbara, Montecito, California. It's been around for about 30 years, and we're part of the New York East Coast office. And it's this great organization that assists with end-of-life dreams, dreamfoundation.org. So go check it out. That's one that I'm involved in. I'm heavily involved with my alma maters where I went to school. And I enjoy being a part of that community, and I will teach classes. And it's way more than just giving financially. I mean, these things, it takes people as well as money. You really need both.
And I think that makes your yes and no that much more important, knowing that you're going to have to, not have to, but that knowing that you're going to contribute so much of your time and energy to something that you care about. So that yes and no is really important to take seriously.
I mean, when you get me, you get all of me, for better or for worse. Hopefully it's for better. But my preferred way to be involved in community is to be involved in community. I mean, I'm always looking for opportunities to be involved with the community. I always want to say yes. If I can't, I can't. But I'm looking for opportunities to say yes. So the people in my immediate communities, I think, recognize that, and we're always participating in everything and anything that we can locally in our own towns, near here and where we live. It's so important. It's our duty, and it's really important for all of us to find many things to be involved with, as many as we can handle, and improve the world and make shit better for everybody. So,
making shit better for everybody.
Yeah.
I love that. All right, last question for today.
Thanks.
Do you have any meditation practices, prayers, mantras, affirmations, anything like that has been helpful to you?
I'm not much of a prayer, so you won't find me praying so much, and I don't really know why. But I can tell you that I think all of that stuff that you just listed, it's really all so similar. So whatever your thing might be, we all probably do one or two or more of those things that you just listed. So for me, I do meditate. I've always meditated for the past maybe 20 years, and I've become good at doing it quickly now. There's a bit of a thing with speed meditation, which I've gotten good at because I'm so pressed for time. But usually at night before I go to bed and in the morning when I wake up, I'm doing some sort of meditation to quiet and still my mind. Affirmations, I mean, I told you before, I'm constantly coaching myself and kicking myself in the ass to do better than I had done yesterday. So with that comes a lot of voices that I'm in my head that I'm directing at myself, saying, do better, you can do it, positive thinking stuff. I mean, I'm always sort of giving myself a pep talk. Nothing specific, but it's important to be able to have some positive energy coming your way and positive comments coming your way. In the absence of anybody else giving it to you, give it to yourself. I remember that when I was practicing yoga quite heavily, that one of my yoga instructors would teach us about breath and the power of breath by saying, you breathe in all this clean air, and when you exhale out all the dirty air. And she would use these metaphors like, imagine like smoke in a glass tube and how foggy and smoky that is, and then if you introduce new air in there and then exhale all that smoke out, the glass becomes very clear. And I was always able to harness that imagery and imagine my breathing when I was breathing in fresh air and breathing out all the affected and dirty and impacted air, and just cleaning out my system and my muscles and my cells. And I found that to be very effective for me. And so if there's any breath study or breath experts out there who can chime in, or maybe yourself, George, I know you're into that, maybe throw up some links about the power of breath. But I think the power of breath is really powerful.
Yeah, no, I definitely agree. Oh, we'll all take a big deep breath with this podcast.
My family always gives me a hard time. They're like, oh, there's Peter and his breathing again, because I'm constantly like doing these yoga breaths.
That's fucking crazy, because my fiance does the same thing. She's like, George, his breathing is crazy today. And like, oh yeah, I went on a run with a friend the other day, and he was like, your breathing is over the top. That'll be our third podcast. That'll be Shut the Fuck Up, Daily Cash Flow, and Breathing with Peter Siegel.
Well, when I deal with the people that I need to tell to shut the fuck up, I have to deal with it by doing a lot of breathing and exhaling.
Yeah, no, absolutely.
Yeah.
Cool. All right, well, thanks, Peter. I appreciate it.
Thanks, George. Thanks, everybody.
Week. If you like what you just heard, you can subscribe to the Daily Cash Flow on iTunes or wherever you listen to podcasts. And we'd love it if you left us a review. You can follow us on Twitter and Facebook @SiegelCap and on Instagram @Siegel.cap. As always, if you're an accredited investor, go to SiegelCapital.com and take our survey to see if you qualify to take part in one of our apartment building deals. That's SIEGEL Capital.com.